everyone, welcome back. My name is Leland Baptist. I'm one of the private bankers for Lee Chandler, and today we're going to talk about real assets, or what someone considers to be a real asset. To my left, behind me, you see a list of blue words. Those are a list of assets, okay? And then to the right, we're going to kind of break down how we consider things to be assets here at Lee Chandler, okay? So, first and foremost, what we consider to be an asset at Lee Chandler is something that you can leverage, all right? So leverage, for those of you who, it may be a foreign word, or maybe you don't use that word too often. Leverage just means that you have the ability to take an asset to maybe a lender, maybe a private lender, maybe an aunt and an uncle, and you can actually borrow against that asset based on its value, okay? And that's what we consider to be, that's one component of what we consider to be an asset. The second component is tax benefit. Are there tax benefits for that asset, okay? Are there tax benefits? And the last but not least is going to be the value, not the value. The last but not least is going to be the velocity of income, okay? And so as an economist in economics, we call this little pi symbol to be that of profit. So you want to know how much profit, how much true income that you're able to retain from a particular asset. So let's go ahead and look at some assets. Let's talk about whether or not we would consider these to be actual assets or not. So a 401k plan. A 401k plan, as we all know what it is, it's a employee savings plan that gives benefit of interest from time to time. All right, and it often allows you to save or set money aside, and it can be either tax deferred normally or tax free depending on different qualifications. Okay, so well, we consider a 401k to be something you can leverage. 90% of the time, no. There are a few programs that will allow you to leverage a 401k plan. However, it will be at a very low LTV. Okay, so let's say I have $100,000 in my 401k plan, and I want to leverage that with some type of financial institution. They may only give me 40% of my 401k's value. Okay, so I'm going to say for the leverage part, not so much. All right. Then what about the tax benefit? Do I receive a lot of tax benefits with a 401k? Depending on how you structure your 401k, whether it's Roth or et cetera, it will basically depend on whether it's pre-tax, post-tax, or deferred. But essentially, you're still going to receive some form of tax 99% of the time. Okay. And then last but not least, what about profit? What about income velocity? When we say income velocity, we mean income that has some type of consistency to it. Okay. Oftentimes for a 401k, because it's really a savings plan, there truly is no true income velocity component to a 401k plan. So that's a definite no. Now, we're going to go ahead and cross that off the list. Second, paper. When we talk about paper, we're talking about the equities that are traded on a stock exchange, okay, day in, day out. Now, something I want everyone to know about is that when we talk about income velocity, oftentimes people associate the ability to trade or sell an asset quickly as velocity, and that's not what we're talking about at all. Because if that's the case, we could say a chair or a light bulb could also be income velocity. That's not the case. When that happens, let's say you are selling a chair, or you are selling light bulbs online at a very quick rate, it allows you to trade or make profit very quickly. It's not the inventory necessarily that we would consider an asset. We actually consider that an asset is the actual business. That model of you trading stock or a chair or a marker online at Amazon and for dollars, basically selling it. That's not really, the marker is not really an asset per se, not from our consideration. The marker is actually a part of inventory that your business is making money for. Okay, so when someone's trading stock, what's really generating money is the business of the stock. So I hope that makes sense. So for paper to be a real asset, no, because if you bought 20 shares of, let's say, Amazon today, okay, and let's say that the following day that the shares quadruple, okay, in value. Fantastic. Now, because it's an asset, that means for our consideration that you have the ability to hold on to that asset, and that asset meets all these three criteria. Okay, your Amazon stock, although fantastic that it quadrupled in value, it's not going to allow you to go to the grocery store and buy groceries. You cannot. It's not going to happen. In order for that to happen, you would have to actually liquidate or trade or sell some of your stock. And when you do that, you're going to actually lower your net worth. So essentially, you would have to eat away at your net worth for it to be beneficial. And that's what happens to most people. So because of that, the income velocity part for paper doesn't happen. Next, we have stock and employer plans or company plans. This is definitely not considered a real asset because you don't control it. Okay? And that goes back to our income velocity and also that of our leverage. Leverage and income velocity gives you control, and that's what you want. That's what you consider to be a real asset, something that you can control. You have no control over your employer plan. Okay. In addition to that, you would have, for it to actually put money in your pocket for you to live off of, you would still have to sell those individual shares for equities. So that's a no. A performing business. If the business is performing, which means that it's generating income and it's producing profit, income velocity, then yes. Most businesses, if done right and with proper bookkeeping, there should be quite a few tax benefits. So that's yes there as well. And then in reference to leverage, if it's a performing business, then yes, there are multiple ways to leverage it and also to leverage the assets within the business. So that's going to be a yes. Now, what about artwork? People talk about artwork all the time. I love artwork. I buy artwork. And to be honest with you guys, it's really not an asset. It's not what we would consider in our business a real asset, because unless you are leasing your art pieces to different museums and different art shows at Sotheby's and so forth, that art is not going to bring you consistent income. When you're leasing something off, that's a business model. That's not necessarily the asset itself producing it. Okay, because for example, I'm going to say this, for art, if it's the best art in the world, then it will bring in profit. You could rent it to the Louvre or to the Met, etc., and it will bring in profit. Okay. However, when you leverage that piece of art, okay, your LTV, your loan to value, is going to be discounted from an appraiser. All right. So if it's fancy art, like one of the best art in the world, I'll consider it to be a real asset because you can leverage it. There will be some tax benefits depending on how it's leased to different companies or museums, and there will be benefits for the income velocity. So for this one, I would say yes, but then also no, because the reality of the average person being able to have a crazy estate of art, okay, or a crazy collection of art that was held on for 5 generations, etc., is very, very rare. Performing real estate. If it is performing, yes. If it's not performing, then that asset can actually become a liability because it's taking funds or money out of your pocket, right? So if it's taking money from your pocket, it's not necessarily going to meet that income velocity. Now, based on how that real estate is structured, it can most definitely be leveraged. Based on how the real estate is structured, it will definitely have tax benefits. Believe it or not, you get tons of tax benefits with real estate and also with business as well. And then also, as long as it is structured properly, as long as it is leased properly, that property or that piece of real estate will be performing, and therefore it's bringing money into your pocket. So that would be a yes as well. Now, what about royalties? Royalties, believe it or not, are actually going to be fantastic assets as long as it is licensed off properly. Okay, So when you have royalties to something, it could be a invention, it could be music, etc., etc. You can actually leverage that portfolio or that estate of music or that estate of licenses for, light bulbs, for example. You can leverage that, okay? Are there tax benefits? There are tax benefits, but only when your estate essentially is a business, there's tax benefits. But if it's not structured properly, there are no tax benefits for that. It's going to be looked as regular income coming in, like capital gains. And then is there income velocity? There is income velocity as long as those royalties are licensed properly. So for that, I want to say yes. IP, intellectual property, I'm going to say yes for that as well, because royalties and IP can actually be in kind of the same category. Now, what about car and transportation? Now, the way a car is normally used, it's normal use of practice, where someone is driving to and from work or to and from, from point A to point B. No. As we all know, cars depreciate the most in value, the quickest in value than any other quote-unquote asset, all right? So can you leverage a car? Absolutely. If you have a clean and free title, you can always go to any other lending institution that allows cars, of course, and you can get a loan or notes or refinance that car for that title. You can do that. Are there tax benefits for a car? A lot of times, no. Oftentimes, the biggest tax benefits you'll have for a vehicle is going to be when you initially purchase it. That could be based on whether the car is domestic or foreign. It can be based on whether or not the car is considered a environmentally friendly or eco-friendly car. But essentially, there's not a lot of tax benefits for a car, unless it's based on your business model of maybe selling cars, transporting cars, leasing cars, etc., etc., etc. And then income velocity. Like I said again, if you're having to liquidate or constantly trade or sell often, it's not likely going to be an asset. What ends up being an asset is actually the business model. So I'm going to say no for that. All right, now we have bonds. So bonds can be a little tricky. There are certain bonds to where they would actually receive income on a monthly basis, okay? That's considered velocity. There are bonds where they receive payments on a yearly or quarterly basis. That's considered velocity, so that's a yes. Tax benefits. Certain bonds, yes, okay? Especially when it's collateral with the debt and so forth, then yeah. I don't want to get too specific on that, so I'll say yes to that. And then leverage. Can you leverage a bond? You can actually leverage a bond depending on what institutions you go to. You will receive a different or a smaller value for that bond, but you can definitely leverage that bond. So for that, I would say yes. And then also, share programs, which are still bonds or equities, little equity programs that people are a part of. This could be you investing in a crowd fund to buy a business, and now you own, 10,000, or not 10,000, maybe you own 500 shares within this equity trust that purchase equity into this business, okay? Oftentimes, if it's not a performing business, if it's a startup, it's not really going to meet the velocity portion of producing income. So I'm going to say no for that. Will it be tax benefits? You don't get a lot of tax benefits when you are investing in shares of a company, okay? You get a lot of tax benefits when you have control of a company, but when you have very, very small shares, like on the stock market, things like that, there's really there's not a lot of tax benefits in that, okay? Once again, your tax benefits will come from if you are operating as a business, and at that point, the asset is not the shares. At that point, the asset is the performing business. Okay. Last but not least, can you leverage it? You can leverage it, but the value, the loan to value that you will be able to leverage that asset is going to be very, very small. Okay. Most institutions will not even most institutions will not leverage a stock portfolio. And if they do leverage your stock portfolio, it is not going to be at a value that truly equates the value of your stock portfolio. Okay. So with that being said, I just want to review it real quick. So at Lee Chandler, we teach and we inform our clients that a real asset, we consider a real asset to be an asset that you can leverage, an asset that has tax benefits, and an asset that has income velocity or profit, okay? And we prefer that profit to be on a scheduled, normal, continuous basis, okay? Whether it's monthly, whether it is quarterly, really nothing further out than 90 days, because it's essential that you're able to build in that time period, okay? If you have to wait, you know, a year or so to receive payment, I would not consider that necessarily an asset, okay? You want something that gives you consistency in cash flow, hopefully at a monthly basis, weekly basis, or even a quarterly basis, all right? So thank you guys so much for your time, and I hope you guys learned what we consider a real asset.